Hello everyone. Let's talk about the latest statistics of the Chinese macroeconomy. Okay, the Chinese National Bureau of Statistics about 1 week ago announced the fourth quarter's GDP and price numbers. Okay, the numbers look great, look wonderful. What are they? Okay, 5.0 GDP growth rate of the first quarter relative to 1 year ago, and the PPI, the producer product index, that is the price which matters the most to manufacturers and to producers, finally got a positive increase to the March number of 0.5%. 0.5%. This is after 41 months, 41 months of consecutive, non-stop negative PPI. That is for the past 41 months until last March, Chinese enterprises had been facing declining prices for 41 months. This is really a tough environment for businesses to do in China, right? Imagine when you sell products, your products prices are coming down month after month for 41 months, over 3 years, okay? So these are beautiful news, right? However, let me tell you, underneath these beautiful numbers, there are still issues. Okay, there are still issues. The fundamental issue is that the market autonomous, indigenous, self-starting forces for economic growth has not been rejuvenated. We are still lacking a fundamental domestic-oriented forces for the economy to go back to its normal path of natural growth. Now, why do I say that? If you scratch out the surface of these numbers, the picture actually is quite different. First, let's talk about the 5.0% the GDP growth number, okay? This number is mostly driven by one thing. It is not consumption. Consumption is not coming up. It's not the housing price, property price. It is one phrase, fixed asset investment. Fixed asset investment accounts for about 40% of Chinese GDP. And this number, FAI, declined last year. Last year declined for many years. For the first time, perhaps in the reform and opening era, for the past 40 years, last year was negative. And this first quarter finally became positive, 1.7% positive. So this 1.7% positive growth of fixed asset investment pick up the GDP growth rate by 0.5%. So imagine if the fixed asset investment were still 0%, zero growth, then the GDP growth of the first quarter would be 4.5%, right? The headline news would be very different. China's economy only grew at 4.5%, right? Worldwide headline news, but now 5.0%. The sense, the feeling is totally different. The tone is totally different, right? Now, what is behind the 1.7% fixed asset investment growth? It is not property. The property investment, the investment in new housing, in construction of new housing, still declined the first quarter by 11%, 11% decline against 1 year ago. And how about manufacturing firms? How about Chinese ChatGPT, Chinese robots? No, dancing robots, no. That's only 4.1%, right? Reasonable, but not exciting, 4.1%. In China, it's not exciting number, only 4.5%. Now, what is the biggest item pushing up the fixed asset investment in China in the first quarter? It is the infrastructure investment, which grew by 8.9%, which is really pushing up Chinese fixed asset investment. 8.9% in infrastructure. So what are the infrastructure projects? They are hydraulic projects, irrigation management. They are the data centers. They are the investment in roads inside cities to rejuvenate cities. These are projects which are mostly planned by the central government. These are projects published in the 15th five-year plan. And this year is the first year of the 15th five-year plan. And the central government knew that their investments have to go first. So to their credit, to give them credit, right? The central government, I'm talking about the ministries, various ministries, were working very hard to kickstart the infrastructure projects, rapid rail, hydraulic projects, data centers at the very beginning of this year. And that helped the GDP growth rate. Okay, but is it sustainable? No. The Chinese economy is too large to be reliant on infrastructure projects. The country is too large to be reliant on the central government. In order for the economy to grow steadily, or to recover steadily to its normal growth of GDP, which I believe is around 5% or even higher, maybe 5.2, 5.3. Okay, the economy has to be reliant on its own market forces. I'm talking about enterprises willing to make its own investments. I'm talking about consumers willing to spend money. I'm talking about households, consumers are getting more and more disposable income. That should be the fundamental force and long-term sustainable force for the economy to fully recover. Now let's talk about the PPI, the Producer Price Index. That number is 0.5% in March. Okay, wonderful number. But if you look at the picture underneath this 0.5% PPI, it is one thing, the crude oil price. The crude oil price increased drastically, and that pushed up various prices, petrochemical products, gasoline, diesel, and so on and so forth, and also transportation, also logistics. And this is not really good news, because this is imported inflation. This means that the extra money goes to oil suppliers, goes to shipping companies. This means that the whole economy, the Chinese economy, is now paying outsiders. This means that the production cost goes up. So this is not only bad news, but also it's hard to sustain, okay? It's hard to imagine that the crude oil price will keep on rising for one more year or two more years, okay? So again, the high PPI finally becoming positive, okay, after 41 months, is actually a sign of higher production costs. It's not a sign of economic prosperity. It's not a sign of higher demand for enterprises. So overall, putting the whole thing together, 5.0% GDP growth, 0.5% PPI positive in March, shows us the following thing. That is, Chinese economy still needs homework, still needs a lot of policy work for the economy to recover from its wounds of the past several years. Local government debt has to be repaired. The central government has to issue more sovereign debt, using the proceeds of the sovereign debts to recoup, using the revenue from issuing new sovereign debt to help local governments to be sustainable, to be financially viable. And therefore, local governments can pay their delayed payments to enterprises, and local governments can, what we call, invest in human capital by investing in a lot of social welfare projects, rather than just giving subsidies to local enterprises. And this is actually clearly the future direction of reform and policy work. Very fortunately, yesterday, the Politburo of the Communist Party, which consists of 24 members, had a meeting, especially talking about the economy. And in the long communique, I think that the message is super clear. That is, although the economy is now doing well, we still have to pay attention to fundamental problems of the economy, and the future policies will have to solve many, many problems, including the problems I just talked about, okay? So let's be positive. Let's pin hope on the Chinese economy's further recovery. Meanwhile, let's not be overly excited by these first quarter's macroeconomic numbers, okay? If you have any questions or comments, please leave them, and I'll be happy to address them. Thank you very much.